Good afternoon, it's 1 o'clock. Welcome to the Wall Street Crossover Show, sponsored by Admiral Markets for TIP TV. I'm joined by Darren Sinden, who is the market commentator at Admiral Markets. Good afternoon, Darren.
Afternoon, Zach.
Right, we're back in the swing of things. September, none of these city holidays now. Clear run till Christmas.
Well, there is one holiday still to come, and that's the Labour Day in the US, which is actually next Mondays, and that's
right.
Probably the real end of the summer as far as the US markets are concerned. Obviously, a lot could happen between then and now, and probably, well, and a lot has happened already
yes.
between then and now, and there's more to come later in the week. So if we have a look at the first slide, we can see the sort of stuff we've had out this morning. But most important data point probably of the day so far, China's National Bureau of Statistics manufacturing PMI for August. So these are official numbers from China, or as official as they get. Came in at 49.7. That was in line with forecasts of 49.7, but was below the key 50 level as far as a PMI number is concerned. If you also remember that reads above 50 are expansionary, reads below 50 are contractionary. So another negative data point.
A fresh negative for the Chinese.
No, I can't honestly believe that anyone was expecting anything other than disappointment, because all the other data we've had recently and the sentiment has been very poor. We talked about that to some degree. But China wasn't alone in producing a disappointing PMI number. French manufacturing PMI for August, also released this morning, came in at 48.3, below forecast of 48.6 and the prior read of 48.6. So again, contraction in France. Germany, a slightly better result. Their number 53.3 against the forecast of 53.2 and the prior read of 53.2. So expansionary, but not exactly knocking the ball out of the park, and certainly not in terms of change month over month. And for the the Eurozone as a whole, the PMI for August on a manufacturing basis, 52.3, slightly below the forecast of 52.4 and the prior read of 52.4. So still some work to do as far as the Eurozone's are concerned. And as we were talking about off air, perhaps we'll hear some more about that work on Thursday when the ECB meets to decide on interest rates. Across the channel and back into the UK, we had our own manufacturing PMI number out for August. Again, something of a disappointment, 51.5. So yes, we've got growth, but that was below the forecast of 51.2 and also below the prior month's read of 51.9.
So quite a disappointment, really.
Yeah, it is. I mean, I don't know if there'll be any seasonality, read into that, and maybe we'll see a better number next month, but probably not what the interest rate hawks were looking for.
Right, so I mean, no, there's nothing there for raising rates at all.
Not as far as that's concerned, no, exactly.
Okay, next slide.
Okay, in terms of European movers, hard to stay away from the China story, and it's exemplified this morning by Anglo-American, that's ticker AAL here in London, trading around 709p, but have been lower, down around 4.3%. And weak China data hits a large cap miner, and that's exactly what has happened. Obviously, China being the principal
main customer.
For commodities, and that's a continued downturn in China is obviously not good news.
But, I mean, it had the bounce from 650. I'm just looking at the chart, about 650 to 750. Now we're back down again.
Yes, because it hasn't been able to maintain the upside momentum. Perhaps we'll see what happens if it gets back to 650, whether we'll rally again. And then looking in Europe, the broad-based stock 600 index, 600 of the largest European companies, trading around 354.93. This is ticker SXXP for those in any doubt, down around 2.17%. And the broad-based European equity index again falls on weak China data and mixed Eurozone data, because I don't think there was too much to get excited about in that Eurozone data either. So, not for all European equities, but for the UK equities that were open today, and the rest of the Stock 600 index, not the best start to the week at all.
Right. Next up, the M&A.
Well, we stay on a transatlantic theme for the M&A. And what some people might think of as a quintessential English brand, Arga Rangemaster, ticker AGA in London, trading around 203 pence, up around 10.9% this morning, on news that it might receive a new counter bid from Whirlpool of the States, that's WHR, the ticker in the US there, that traded or closed yesterday, I should say, at $168.10. Now, Whirlpool is best known really as a as a manufacturer of white goods.
Possibly the other end of the market, one would
Well, it is absolutely, yes. I mean, it's it's relatively affordable consumer durables, whereas Arga is an iconic British stove manufacturer whose products cost tens of thousands of pounds. But the British stove business could have a lifestyle appeal to certain sections of the US. Arga, of course, had recently agreed a deal. We're literally talking about
exactly. I thought it was all over. So when I saw the share price moving today, I thought, well, this could be a misprint or something.
Well, no, they'd agreed a deal with a firm called Middleby, and they were agreed to be sold for around about £129 million. But Whirlpool seemed to have thrown the cat among the pigeons. There might have to be some fast movement from Whirlpool to get another bid in ahead of the Middleby deal potentially closing. And there's going to have to be some discussions with the takeover panel, I understand, if they want to do that. Nonetheless, it seems only fair probably for Arga shareholders to have a better offer if one comes on the table. In terms of what either of these companies will be getting, Arga sales at the halfway stage, again, these were numbers reported in just the last 2 weeks, came in at around £125.4 million, up around 1.5% on the same period in 2014. Operating profits were much better though. They were up at 2.8 million, so a rise of around 16% over the first half of 2014. However, there's quite a bit of in terms of one-off charges, closures, pension costs, etc., which meant that the company actually traded at a 4 million loss in the period. Nonetheless, there's a reasonable turnover there, and given the sort of niche nature of the product, I guess Whirlpool's hoping that, or indeed Middleby, that they could entice a bigger US market into buying more Argas.
Point to know though, that at the end of April, as recently as that, the shares were trading at 78 pence. So it's not quite a bargain really at the moment.
Oh no, in no sense could you say that. But it's just I suppose that's the price you get when two US firms are fighting it out over you.
Right, excellent. Okay, well let's move on to the data points for the US.
Okay, well I've just picked on a couple of numbers here today. First of all, sounding a bit like a broken record, but in the US we also have manufacturing PMI for August. The expectation here is for a bit of a slowdown, so we're looking for a read of 53 against July's version of 53.8. So a better number would be hawkish. A weaker number than 53 would play into the interest rate doves' hands. And then the Institute of Supply Management, their manufacturing index data is also out this afternoon. A forecast here is for a slight improvement. So we're looking for a read of 52.8 versus the prior read of 52.7. It'll be interesting to see which way around those numbers come out. But again, all eyes on that ISM number 2, for clues and hints about what the Fed might do in a couple of weeks' time when it meets to decide about September rate rises or no.
Right, okay, the pre-market movers and levels for the US.
Okay, well, we'll start with a stock called Criteo, CRTO in the US. This isn't so much a pre-market mover as one that moved sharply yesterday, and I thought I'd just highlight that. $39.21, they closed, down 9.03%. And the reason why was quite straightforward. Criteo is a business that specialises in online and mobile marketing and advertising. And the Wall Street Journal had a big piece yesterday that highlighted Apple's moves to enable ad blocking software in both Safari and in iOS 9. And that's seen as a big negative for digital marketing groups like Criteo, who get paid by.
Quite a bit of a subtle hit there.
Yeah, because obviously these businesses earn their money by enabling the display of ads on mobile devices, particularly these days, but they're still
they are very irritating.
Too. They are, and although of course the likes of Google also make a good deal of money out of them. So, but Apple appears to be giving customers the choice to not see them if you don't want to. So that's why Criteo down 9%. And then in terms of broader US equities, S&P 500 futures indicated around 1929.75. That's down 2%. From the prior close, and again it's just a straight read through from the weak China data and a poor European session.
It's a big move down though, because the close, I've got the close of 1972 on the last time around, but it's a big drop.
It is, no, absolutely, yeah, look for that. I mean, the Dow's cooled down actually even more than the S&P at the moment. Levels to watch today then, as far as equity indices are concerned. In terms of Europe, we're now looking at 60.70 in the FTSE as the downside level, plays 61.90. we have tested down to that 60-70 level in the session. A close below there would be the determining factor, I think. As far as the DAX is concerned, rather disappointingly, we no longer have a 10,000 handle on the downside number, so 9,928 is our downside level, playing 10,130 on the upside. And for the US indices, bearing in mind that negative call on the S&P futures, 1930 plays 1972 in the S&P cash are our two levels to watch, and for the Dow we look at 16,277 on the downside, plays 16,444.
So we're really waiting to see now whether, well, after the respite after that Black Monday, whether it's we recover, it's a V-shaped recovery, or we actually head down and retest those lows.
Yeah, absolutely. I mean, August was the worst month the Dow's had for many a year. I think it was down 6% overall, despite a few days of sharp rallies. So it looks like it's heading lower again today. You're right. Yeah, V-shaped recovery or something that takes a little longer. I probably favour the latter, but we shall see.
Yeah, okay.
And in terms of currencies, euro dollar 112.30 on the downside now, plays 113.04 to the upside, so the euro seems to have stabilised in the short term, or maybe the dollar's just given up the ghost a bit, as we'll see later. Aussie dollar US dollar should say 70.34 on the downside, plays 71.00 to the upside, so again a bit of weakness there. Not surprising to see the Aussie fading on the China data. Dollar yen 119.75 is our downside level, so back below that 120 handle, plays 120.65 to the upside. And then in cable, we talked about this last week, it just seems to have lost all upside impetus, and 153.20 now is our downside, plays 153.80 to the upside, and I have to say, still looks to me like it could trend lower.
Right, so sterling looking sickly at the moment.
Yeah, just any it's hard to credit, isn't it, that less than 10 days ago we were testing well above 158 and thinking it could go higher, but that seems a distant memory at the moment.
Right, let's go on to your in focus section.
Okay, so what are we watching here in focus? Well, dollar index, and the question we're asking today is, will the dollar see safe haven flows? So we've obviously had a couple of weeks of market turmoil, but that's not to say that's completely behind us. And so traditionally, in times of market turbulence, I should say, the US dollar has been and is seen as a safe haven into which money has traditionally flowed. However, in the last 2 weeks, we've actually seen weakness in the dollar, which has rallied, but not conclusively. In the chart here, we've plotted this dollar index up until last night's close, though we traded down again this morning. But I think what you can clearly see is that we remain below both the 20 and 50-day EMA lines, and that near-term downtrend line that I've drawn in red there is also weighing in on the picture. As we noted last week, China has been selling US dollar assets in predominantly US government bonds, and of course this might, and they're doing it in some size, they sold about 10% of their holdings up until the end of last week, so this may account for some of the weakness. But if we are to see a US rate rise soon, and that could be as soon as sort of a fortnight away, then the theory of the market suggests that we should also see dollar strength. But actually, if we look back over the last sort of 4 or 5 interest rate cycles, that may not happen unless in anything other than the short term. So we could find ourselves in the odd situation where we have market turbulence and a weakening dollar in the face of a potential US dollar rate rise. So quite an odd scenario if that happens. Obviously, the level to watch there would be, on the chart here, would be the 200-day EMA line, denoted by the red line, and the recent low there at the bottom of that sharp drop and rally.
Okay, well that concludes the Wall Street Crossover show today. Thank you, Darren Sinden, market commentator at Admiral Markets. We'll be back at 1 o'clock tomorrow with the show again.